Hello everyone, John AG here. Welcome back to my channel, Aurex. If you haven't yet subscribed to my channel, in this channel you will find the real information, real market updates that everyone cannot tell you. So please subscribe this channel and love you all of my subscribers for your support. And please watch this video till the very end because YouTube will not push my videos to more people. Let us get straight to the undeniable facts because the information we are covering today is not just about making money. It is about your absolute financial survival and the permanent legacy you are going to leave behind for your family. To truly understand why gold, silver, and copper are so grossly, almost unbelievably undervalued right now in 2026, we first have to completely unlearn the biggest, most dangerous lie we have ever been taught about the concept of money. We have been systematically conditioned from the moment we open our first bank account to view wealth strictly through the lens of price. When you open a chart and look at an ounce of gold and you see it trading past $4,500, or you see silver rocketing violently through the 70s, or copper smashing through all-time historical highs, your immediate knee-jerk reaction, programmed into you by decades of mainstream financial media, is to say, "It is too expensive. The market is overbought. I have completely missed the boat." But let me tell you a secret that Wall Street prays you never figure out. Price is an absolute illusion. Price is merely a temporary reflection of the currency being used to measure it. Price is a constantly moving target. Think about it this way. If I ask you to measure the length of a room, but the ruler I hand you is made of elastic, the room isn't magically getting bigger when the ruler stretches. The room remains exactly the same size. It is your unit of measurement that is fundamentally failing. That is exactly what modern fiat currency is. It is a broken, infinitely elastic ruler. Ever since the global geopolitical fracturing of the early 2020s, the escalating tariff wars, the breaking of supply chains, and the relentless astronomical printing of currency required to cover insurmountable mathematical sovereign debt, the rulers we use to measure our wealth, whether it is the US dollar, the euro, the British pound, or the Japanese yen, have been stretched entirely beyond recognition. Value, on the other hand, is an entirely different concept. Value is intrinsic. Value is the actual purchasing power a hard, tangible asset retains across generations, across centuries, across the rise and fall of entire empires. Value represents the literal physical energy, the blood, sweat, and human labor, and the absolute geological scarcity required to physically pull a dense element out of the Earth's crust. Value cannot be printed by a desperate central bank chairman hitting a button on a keyboard. It cannot be digitized into existence by a clever line of code in Silicon Valley. It cannot be sanctioned by a foreign government. It cannot be inflated away by a deficit-spending Congress, and it cannot be defaulted upon. When I look you in the eye and tell you that these three specific metals are undervalued, I am not just looking at the nominal price tag attached to them. I am looking at their ratio to the massive, unprecedented expansion of the global money supply. I am looking at the M2 money supply charts that look like rocket trajectories. I am looking at the tens of trillions of dollars in unfunded liabilities, the collapsing pension funds, and a global derivatives market that is a ticking time bomb measured in the quadrillions. When priced against the sheer, suffocating volume of fiat currency that has violently flooded the planet over the last 6 years, gold at $4,500 isn't expensive at all. It is a coiled spring held down by manipulation. Silver at $75 isn't a speculative bubble. It is a profound, desperate market correction, trying to find its true equilibrium in a world completely starved of it. And copper isn't just an industrial building material. It is the absolute, unavoidable bottleneck of human technological progress. Let us break down the ultimate sovereign shield, gold. Gold has always been and will always be the ultimate, undisputed monetary anchor of human civilization. This is a metal that has flawlessly survived the terrifying rise and catastrophic fall of the Roman Empire. It survived the devastating hyperinflation of the Weimar Republic in the 1920s. It survived the collapse of the Zimbabwean dollar, the Argentine peso, and literally every single fiat currency experiment ever attempted in human history. Every fiat currency eventually returns to its intrinsic value, zero. Gold has a 5,000-year track record of undefeated, unblemished wealth preservation. But look closely at what has transpired behind the curtain as we navigated the chaos of 2024, 2025, and now 2026. Gold finally broke out of its agonizing multi-year consolidation phase and embarked on a historic multi-year rally that caught retail investors completely off guard. We watched in awe as it climbed past $3,000, then $4,000, and now major, traditionally conservative institutions like JP Morgan and Goldman Sachs are openly, publicly projecting prices pushing toward $5,000, $6,000, and potentially much higher by the end of the decade. Why the sudden shift in narrative? Because the fundamental bedrock of global finance has permanently fractured. For decades, we were told that gold was just a pet rock. It was the dusty insurance policy you kept in the basement and hoped you never actually needed to use. Today, right now, it is the primary, desperate savings vehicle of the world's most powerful, nuclear-armed nations. Ever since the massive geopolitical shifts of 2022, when Western nations weaponized the US dollar financial system by freezing sovereign foreign exchange reserves, we have witnessed a monumental, terrifying shift. Central banks, led aggressively by China, Russia, India, and the rapidly expanding BRICS coalition, have been buying physical gold at an absolutely unprecedented, breakneck pace. We are talking about consecutive years of near or above 1,000-ton purchases. Even as the pace attempts to normalize slightly in 2026, the structural, systemic trend is permanently locked in. You have to ask yourself, why are the smartest, most informed macro entities on the planet doing this? They are doing it because the weaponization of the dollar forced the global South and the East to desperately seek a neutral, sanction-proof, counterparty risk-free reserve asset. They are currently engaged in a massive, coordinated de-dollarization effort. This is not some grand conspiracy theory, it is public, stated policy. And when a sovereign central bank buys gold, they are not buying paper exchange-traded funds. They are not buying promises. They are taking immediate physical delivery. They are pulling thousands of tons of metal off the London Metal Exchange, draining the COMEX vaults in New York, and flying it back to their highly guarded sovereign vaults in Beijing, Moscow, and New Delhi. Every ounce they take physical delivery of actively drains the fractional reserve system of paper gold, bringing the system closer to a mathematical breaking point. And yet, despite this historic, earth-shattering rally, gold remains shockingly under-owned by the Western retail investor and traditional pension funds. Institutional portfolios in the West currently hold barely 1% to 2% of their massive assets under management in gold or gold-related equities. During the devastating stagflation of the 1970s and early 1980s, that allocation was significantly higher, often reaching 5% or more. If pension funds, mutual funds, and everyday retail investors simply wake up to the reality of the math and attempt to revert to a historical mean allocation of just 5%, there is physically not enough gold above ground at current prices to satisfy even a fraction of that demand. The price must rise, not because speculators want it to, but because it physically has to in order to balance the sheer mathematical equation of supply and demand. We are trapped in a world of persistent, deafening macroeconomic noise. Real yields on bonds are deeply negative when adjusted for true, on-the-ground inflation. Government deficit spending is structurally elevated and out of control. The interest simply to service the U.S. national debt has now become the single largest line item in the entire federal budget, surpassing even national defense. The Federal Reserve, the European Central Bank, the Bank of Japan, they are all completely, inescapably trapped in a box of their own making. If they raise interest rates to genuinely fight this sticky, deeply entrenched inflation, they instantly bankrupt their respective governments and trigger a catastrophic global depression. If they lower rates and resort to printing trillions more to monetize the massive debt, they completely destroy the purchasing power of the currency. Gold is the only asset on the planet that mathematically resolves this impossible paradox. It is the silent, glowing alarm of a burning financial house. And right now, my friends, that alarm is ringing so loudly it is deafening. But if gold is the impenetrable vault of central banks, silver is the restless, highly volatile, irreplaceable titan that the modern industrial world simply cannot survive without. The story of silver in 2026 is, without a doubt, the most asymmetrical, explosive investment thesis in modern financial history. Last year, silver surged over 120%, violently smashing through the stubborn psychological $50 ceiling that had artificially capped and frustrated investors for over a decade. It officially entered what technical market analysts call pure price discovery. But to truly comprehend why silver is fundamentally, deeply undervalued even at $70, $80, or $100 an ounce, you have to peer beneath the surface and look at the terrifying reality of its physical supply and demand fundamentals. We are currently sitting in our seventh consecutive year of a structural, massive physical supply deficit. I want you to pause and really let that fact sink into your mind. For 7 straight years, the global economy has ruthlessly consumed more physical silver than the entire global mining industry has been able to pull out of the earth. The massive above ground stockpiles that were built up over decades, the vaults in London and New York, are being relentlessly, systematically drained to keep the modern world functioning. Silver possesses a fascinating, almost schizophrenic dual personality. On one hand, it is a historical monetary metal. For thousands of years, it was the money of the common man, moving in tandem with gold as a brilliant hedge against inflation and currency collapse. But unlike gold, which largely sits comfortably and safely in dark vaults doing nothing, silver puts on its work boots and goes to the factory. Over 60% of all global silver demand is purely industrial, and it is not just any legacy industry, it is specifically the industries of the future. Silver holds the undisputed title of being the most electrically conductive, the most thermally conductive, and the most highly reflective metal on the entire periodic table of elements. You physically, scientifically cannot build a green energy economy without it. Every single solar photovoltaic panel rolling off the assembly lines in massive gigafactories requires a heavy, irreplaceable paste of highly refined silver. In 2026, the solar industry alone is ravenously consuming nearly 35% of total global industrial silver output, driven by mandates and subsidies worldwide. Add to that the explosive, unstoppable growth of electric vehicles. An EV uses 2 to 3 times more physical silver than a traditional internal combustion engine. It is in the battery management systems, the complex wiring harnesses, the autonomous driving sensors, and the charging stations. Then add the rollout of 5G cellular networks, massive AI data center switches, advanced military robotics, aerospace engineering, and high-end medical technology. The demand curve for silver is going completely parabolic, pointing straight up. But the supply curve? The supply curve is flatlining. It is completely stagnant. Why? Because over 70% of all the silver produced in the world is not mined from dedicated silver mines. It is extracted entirely as a secondary byproduct of mining other base metals like zinc, lead, and copper. This is a crucial, misunderstood point. You cannot simply flip a magical switch and tell a mining company to produce more silver. Even if the price of silver rockets to $200 an ounce tomorrow, a zinc miner cannot magically increase their silver output without overproducing and crashing the price of zinc. Their output is entirely dictated by the macroeconomic demand for the primary base metals they are digging for. This dynamic creates an incredibly, dangerously inelastic supply. Desperate institutions and manufacturers are constantly issuing warnings about thrifting, the hopeful idea that companies will try to use less silver or find cheaper chemical substitutes as prices inevitably rise. But the immutable laws of physics are a harsh, unforgiving mistress. Every single attempt by engineers to replace silver in high-efficiency electronics, advanced microchips, and modern solar panels has resulted in drastically inferior performance, dangerous thermal heat degradation, or catastrophic product failure. There is simply no substitute for silver's unique, God-given atomic properties. Furthermore, you must look at the historical gold-to-silver ratio, which remains historically, almost comically skewed. For centuries, literally since the Roman Empire, this ratio sat naturally in the Earth's crust at roughly 15 to 1. In the modern, heavily manipulated era, it has fluctuated wildly, often hovering between 70 and 90 to 1. But even today, as silver climbs higher, the ratio implies that silver is still incredibly, absurdly cheap relative to gold. If gold simply holds its current ground at $4,500, and the ratio merely reverts to a very conservative historical norm of 40 to 1, silver mathematically has to cross well over $100 an ounce just to catch up. The paper futures markets in New York and London have systematically suppressed the price of silver for decades, creating a dangerous, temporary illusion of abundance by trading hundreds of paper ounces for every one physical ounce in the vault. But the physical market is tightening like an industrial vice. Manufacturers are demanding delivery. When the paper illusion finally, inevitably breaks, the repricing of physical silver will be violent, sudden, and absolutely breathtaking to witness. And then, we arrive at the third pillar, the metal of human civilization, copper. They call it Dr. Copper. It is the metal with a PhD in economics, historically known for perfectly signaling the overall health and direction of the global economy. But standing here in 2026, copper is no longer just a simple macroeconomic barometer. It has aggressively evolved into the single most strategically critical industrial resource on the face of the planet. Copper is the absolute, undisputed lifeblood of global electrification. Without it, the modern world literally stops functioning entirely. And right now, we are staring straight down the barrel of a devastating, multi-year supply shock that the broader financial market is only just beginning to wake up to. Look at the massive, unstoppable megatrends converging all at once in this specific decade. First, the total electrification of global transport. As governments mandate the phase-out of gas cars, millions of electric vehicles are hitting the roads. As I mentioned before, an electric vehicle requires massive amounts of copper, up to 4 times as much as a traditional car. It is packed into the heavy electric motors, the dense battery packs, the highly complex inverters, and miles of internal wiring. Second, we have the massive global renewable energy transition. Giant offshore wind turbines consume roughly 3 to 5 tons of pure copper per single megawatt of power generation. But the real wild card, the absolute black swan of demand that has caught the market entirely off guard and sent analysts scrambling to rewrite their models, is artificial intelligence. The explosion of AI requires hyperscale data centers that are larger and more power hungry than anything humanity has ever built. These massive, sprawling facilities consume absolutely unprecedented, staggering amounts of electricity. To handle that power, they require heavy-duty, incredibly copper-dense power infrastructure, massive industrial transformers, specialized liquid cooling systems, and millions of miles of internal connectivity. The AI revolution, at its absolute core, is fundamentally a copper revolution. The ethereal digital cloud that everyone talks about is quite literally held together, grounded, and powered by physical copper wire. And while this demand is accelerating at an exponential, terrifying rate, global supply is structurally, severely crippled. Discovering a new, viable copper deposit, securing the agonizing decades of environmental permits, fighting off local opposition, raising the billions in required capital, and actually building a functional producing mine takes, on average, a staggering 15 to 20 years. We simply have not invested anywhere near enough capital in geological exploration and mining infrastructure over the last 2 decades to even come close to meeting the massive demands of the late 2020s and 2030s. The major legacy producers in Chile, Peru, and Zambia are dealing with rapidly declining ore grades. This means they have to dig much deeper, use vastly more energy, and process significantly more dirt just to extract the exact same amount of copper they did 10 years ago. Add to that the rising tide of geopolitical resource nationalism, severe water shortages in critical mining regions, and constantly fractured supply chains, and you have the recipe for a perfect, inescapable storm. When supply is highly constrained and demand is completely, ruthlessly price inelastic, meaning governments, tech monopolies, and utility corporations absolutely must buy the metal regardless of the cost in order to hit their AI milestones and climate goals, the price of the commodity has no choice but to rise dramatically to ration the available, dwindling supply. Copper breaking through all-time highs isn't a speculative, fleeting bubble driven by day traders. It is the physical market desperately, violently signaling to the entire world, we need more metal, we need it immediately, and we are willing to pay any price to get it. But again, the current paper price on the exchanges still does not accurately reflect the long-term intrinsic value. When you meticulously map out the required electrical infrastructure for the next 20 years against the known, proven geological reserves that are economically viable to mine, the math simply does not work at $4, $5, or even $6 a pound. For the global miners to justify the massive, multi-billion-dollar capital expenditure required to bring new, highly difficult, and risky projects online, copper needs to be priced significantly, structurally higher. It is the foundational metal of the future, and right now, it is trading at a massive discount to its inevitable, terrifying scarcity. Why does every single piece of this complex puzzle matter to you? Why am I spending my time bringing you this deeply researched, critical information on Aurex? Because at the end of the day, true economics is not about sterile charts, mathematical graphs, or high-frequency trading algorithms operating in Wall Street server rooms. Economics is profoundly, intimately about human life. It is about your life. It is about human time. When you wake up early, leave your family, and go to work, you are literally trading your finite life energy, your irreplaceable time, your sweat, and your intellect for a specific currency. You are placing absolute trust in a system. You are trusting that the government and the central bank will protect the value of your stored labor so that when you desperately need it in the future, for your children's college education, for a sudden terrifying medical emergency, for a quiet, dignified retirement, that purchasing power will still be there waiting for you. But inflation is a quiet, insidious, invisible thief operating in the dead of night. It is a regressive, unvoted upon tax that systematically drains your life savings without you ever having to physically write a check to the government. When desperate politicians and trapped central bankers print trillions of dollars out of thin air to fund endless foreign wars, to fund massive, bloated domestic deficits, and to fund empty political promises they know they can never afford, they are not magically creating new wealth. Wealth cannot be printed. What they are actually doing is ruthlessly stealing the purchasing power from the existing currency you hold in your bank account. They are reaching back in time and stealing the labor you already performed. They are stealing your time. This is the great, heartbreaking tragedy of our modern era. Millions of hardworking, deeply honest, salt-of-the-earth people are doing everything exactly right. They are working grueling overtime shifts. They are diligently saving their money in traditional bank accounts. They are playing strictly by the rules they were taught in school. And yet, month after month, year after year, they are falling further and further behind. They feel the heavy, crushing anxiety in their chests when they sit at the kitchen table to pay the monthly bills. They know in their bones that something is deeply, fundamentally wrong with the system, but they are constantly distracted, confused, and divided by the relentless, toxic noise of mainstream politics and corporate media. Gold, silver, and copper are not just mere financial investments to stick in a portfolio and forget about. They are a profound, powerful declaration of personal financial independence. They are a total, uncompromising rejection of a completely broken, immoral fiat debt system that sadistically penalizes the prudent saver and massively rewards the reckless, over-leveraged debtor. When you hold physical gold in your hands, you are officially stepping outside the dangerous, fragile matrix of counterparty risk. If a major commercial bank fails tomorrow, your physical gold is still gold. If a sovereign government defaults on its massive debt obligations, your gold is still gold. It is pure, unadulterated sovereign wealth that you can hold in the palm of your hand, completely outside the digital tracking and control grid. When you hold physical silver, you are holding the absolute, indispensable element of the future. You are holding a metal so vital, so deeply woven into the fabric of modern technology that human progress literally stalls and regresses without it. You are buying a vital piece of the global infrastructure before the rest of the world wakes up to the shortage. This entire conversation is about one thing: protecting your family. It is about actively building an impenetrable fortress around your hard-earned purchasing power that the central banks and the politicians absolutely cannot breach, no matter how much currency they print. It is about waking up and recognizing that we are currently living through the single largest wealth transfer in the history of mankind. Wealth is never truly destroyed in a financial crisis or a currency collapse. It is simply ruthlessly transferred from the uninformed, the trusting, and the distracted straight into the hands of the deeply informed, the prepared, and the vigilant. It is transferred from those who blindly hold paper illusions to those who physically hold tangible reality. We are officially, undeniably entering a massive multi-decade commodity supercycle. The rapid geopolitical fragmentation of the world, the desperate onshoring of critical supply chains, the staggering, power-hungry artificial intelligence boom, and the violent death throes of the global fiat debt system are all converging right now into a single, undeniable, overwhelming reality. The financial establishment will do absolutely everything in their immense power to shake you out of these positions. They will intentionally create wild, terrifying volatility in the paper markets. You will undoubtedly see days where the massive bullion banks dump billions of dollars of paper contracts onto the market in the middle of the night to flush the price of gold and silver down, trigger automated stop losses, and terrify retail investors into selling their physical metal. You will constantly hear highly paid, immaculately dressed financial pundits on mainstream television networks loudly proclaiming that commodities are a barbaric relic of the past, that digital illusions or overvalued tech stocks are the only acceptable way forward. Do not fall for the grand illusion. Look strictly at what they actually do with their own money, not what they tell you to do with yours. While they desperately tell the working class to stay fully invested in a rapidly depreciating fiat currency and an overinflated stock market, the central banks of the world are quietly, relentlessly backing up the proverbial truck and loading it with thousands of tons of physical gold. While they tell you that silver is just an irrelevant industrial afterthought, the largest manufacturing superpowers on Earth are systematically hoarding every single physical ounce they can possibly get their hands on. Your sole job in this critical moment in history is to look past the chaotic, manipulated daily price fluctuations and focus entirely on the deep, fundamental core value. You must deeply understand the massive, unfixable supply deficits. You must understand the inevitable mathematical reality of monetary degradation. Positioning yourself in these specific hard assets whether that is through accumulating physical bullion in your own possession, investing in high-quality proven mining equities, or making strategic long-term portfolio allocations, requires immense patience, unshakable conviction, and a stubborn refusal to be swayed by the daily noise. It requires a profound understanding that you are not just simply trading a financial market, you are actively, consciously opting out of a failing, dying paradigm. The window of opportunity to acquire these critical, world-building assets at a massive discount to their true, fundamental value is rapidly, permanently closing. The elastic rubber band of the global financial system has been stretched to its absolute, terrifying breaking point, and when it finally snaps back to reality, the violent repricing of hard, tangible assets will be a historic event studied for generations. You have to make a definitive choice today. You can blindly trust the politicians, the central bankers, and the very financial institutions that selfishly engineered this catastrophic debt spiral to somehow magically fix it. Or you can place your trust in 5,000 years of recorded human history, the immutable, unbreakable laws of physics, and the cold, undeniable mathematical reality of supply and demand. Protect your wealth, protect your family's future, educate yourself relentlessly, and take decisive action before the grand illusion finally shatters completely. Thank you for being here with me today. Thank you for actively seeking the unvarnished truth in a world full of noise. If this video resonated with you on a deep level, if it opened your eyes to the stark reality of what is actually happening in the global markets right now behind closed doors, please do your part and share it. Send it immediately to your family, your closest friends, your colleagues, anyone who desperately needs to hear this critical message before it is too late. Hit that like button to help break the algorithm and leave a comment below right now. Tell me, are you aggressively stacking physical gold? Are you accumulating silver? Or are you heavily focusing on the unstoppable copper revolution? I personally read every single comment you leave. And always remember, the world around us is changing incredibly fast. But on this channel, we will always navigate the incoming storm together. Stay strong, stay vigilant, stay deeply informed, and I will see you in the very next video.